When I look at the previous year, Sue, and of course, Happy New Year, I see
to you too, my dear.
Well, I see 3 years that were jittery. I see 3 years where there was selling, and so therefore people trying to get invested. I see 3 years where there was a lot of tax loss selling against winners. And this year is not like that. Geez, the Dow up 30, S&P up more than that. So I think what happens is that people would just say, you know what, I'm going to ring the register. It's all too good to be true. And that's people's opportunity at home.
You know, Jim, we're going to hear inevitably over the next few days. If the first day of the trading year is a bad day, it's going to be trouble. If it's the first week is down, it's going to be trouble. If it's up, it's this. Do you put any stock in that kind of numerology?
The only one that worked that I saw was if you come into November and the markets are big, November tends to be good and December comes up to be good. But, you know, all of these sell in May, and if the month is not good, another month, they don't work.
Right.
Individual stocks. This is a stock picker's environment. You want to go that route? You want to be that crazy risk on, risk off? Well, go work at a hedge fund. Go work at a hedge fund. It does no good for the people at home.
Jim, speaking of the people at home, a lot of the retail investors either got into last year's market very late or were afraid that they'd missed most of the run and they were afraid of a pullback. So if you missed most of what was gained in 2013, what do you do now in the new year?
Well, look, it's a great question, Sue, because I know a lot of people did. There are some segments that really just didn't participate. The banks, they frankly were a disappointment for most people. I also feel that there's a lot of biotech that paused. A lot of stocks paused in the last 2 months as we had a gigantic cyclical rally. But you know what? I think the cyclicals are still inexpensive. And when rates go up, that's a sign that business is better. So I think a lot of our international companies that are involved with construction and building, they're winners, not losers. I like them.
So when you say cyclicals, what do you mean? The kinds of company, you just mentioned a couple, but...
Let's talk about 3M down today. United Technologies.
Right.
These had a very nice run going into year end. A lot of people said, oh, I missed it. No, wait a second. The stuff that I've been thinking about, the stuff I'm writing about, that is when these things happen, this is when you can say, you know what, maybe I didn't miss it. Maybe there's opportunity. I think that 2014, we got to change the mindset. The mindset is when the market goes down, you find what you like and you sink your teeth into it, as opposed to saying, oh, I missed it, and now it's just going to keep going down. You got to start buying.
You know,
carefully.
I was talking carefully. That's the beauty of your books, Jim, is you make these complicated things very accessible.
Try to do that.
I mean, I'm telling you, I've read almost probably all of them.
No, and I know
there's so many of them, but I'm telling you, they're really good.